Hi, Ryan. So good to see you.
Hello.
Welcome back to our Minute Market Update. And there's lots of exciting things happening in the market. First hot topic is the Feds met and they didn't cut the rates. What does that mean for us?
Yeah, good question. So the headline that everybody may have seen in the last week or so is that the Federal Open Market Committee met at the end of January 2026. And as the market was expecting, they decided to keep the federal funds rate unchanged. So why should you care about this as a homeowner? The truth is, it doesn't really have a direct impact on mortgage rates. And though the headline seems a little disappointing because it doesn't mean rates necessarily are moving down immediately, but just as a reminder, mortgage rates move independently from what the federal funds rate is doing. So I think there's a ton of optimism still for 2026 that mortgage rates are going to come down, even though the Fed has decided to keep the rate unchanged for the next 6 weeks or so. And specifically, we have a new Fed chair coming in May, and the expectation is that he will start cutting rates when he arrives. There's a lot of weakness in the jobs data, and inflation seems to be in check now. So there's a lot of reason to believe that they will start cutting rates, and mortgage rates will also benefit from that eventually. So, yeah.
Well, that's good to know. I think in my mind, every time, before I was really educated, I think, oh, Fed rates, they're not cutting all the rates everywhere, not going to change and it's going to be bad. So it sounds like there's an interrelated web of influences, but it's not a direct relationship. Is that right?
That's right. I would use the term indirect correlation. So they are correlated, but they don't move always in sync with one another. And oftentimes mortgage rates move on news, economic news. More importantly, we just recently got an ADP Jobs Report the last couple of days that show a ton of weakness in the labor market. And that has more impact on mortgage rates than what the Fed's even doing with the Fed funds rate. So there's just a little example for you.
Well, that's great. I love knowing all of this. And what does it mean for consumers out looking for a home?
Yeah, really, really good question. The truth is, I think now's a fantastic time to buy a property. Mortgage rates have recently kind of taken a dip from what we've seen over the last 12 to 14 months. So timing's really good, and that mortgage pricing is seen a little relief. And it's a perfect buying season right now because typically this time of year, you get the seasonality benefit as a buyer. And now you're getting a little lower interest rate than what we've seen the last few months. So if you haven't already, I'd go out and get your home before the spring buying season picks up and you're competing with a ton of buyers.
Well, I love that, Ryan, from two totally unbiased people who not directly benefit.
We're not industry people.
From a home builder and a mortgage lender, you're hearing to hear from us first. Now it's your time to buy.
Thanks for having me.
Thank you.